US research firm Hindenburg alleges stock manipulation, Adani Group says malafide. Mumbai. The Adani Group is exploring legal options under both US and Indian laws against Hindenburg Research, which in a report called out debt and governance issues at the conglomerate, leading to stocks of group companies losing 85,000 crore rupees in value in Wednesday's trade. We are evaluating the relevant provisions under US and Indian laws for remedial and punitive action against Hindenburg Research, as per a Kamone statement on Thursday citing Jatin Jalundhwala, Group Head Legal, Adani Group. Hindenburg claimed that its 129-page report was the result of 2-year worth of efforts and its investigations led them to several countries, including the tax haven of Mauritius. Researchers from Hindenburg pointed out a complicated maze of transactions undertaken by many of the listed Adani Group firms. The report highlighted alleged shell firms founded in tax havens, including the United Arab Emirates and Mauritius, which have been used to give loans to some listed and private companies, often without making requisite disclosures. Even if you ignore the findings of our investigation and take the financials of Adani Group at face value, its 7 key listed companies have 85% downside purely on a fundamental basis owing to sky-high valuations, Hindenburg said in the report. The report said the investment group took a short position in Adani's companies through US-traded bonds and non-Indian traded derivative instruments. In its statement, Adani Group said that the maliciously mischievous, unresearched report published by Hindenburg Research on the 24th of January has adversely affected the Adani Group, its shareholders, and investors. The volatility in Indian stock markets created by the report is of great concern and has led to unwanted anguish for Indian citizens, it added. Clearly, the report and its unsubstantiated contents were designed to have a deleterious effect on the share values of Adani Group companies, as Hindenburg Research, by their own admission, is positioned to benefit from a slide in Adani shares. We hold short positions in Adani Group companies through US traded bonds and non-Indian traded derivatives, along with other non-Indian traded reference securities, the statement said. We are deeply disturbed by this intentional and reckless attempt by a foreign entity to mislead the investor community and the general public, undermine the goodwill and reputation of the Adani Group and its leaders, and sabotage the FPO follow-on public offering from Adani Enterprises, it added. The 20,000 crore rupees follow-on public offer (FPO) of Adani Enterprises, which opens for public subscription on Friday and closes on the 31st of January, saw a clutch of foreign and domestic investors buy shares worth almost 6,000 crore rupees as part of the anchor book allocation. Investors who participated in the anchor book include Singapore-based Maybank Securities Private Limited, insurance behemoth LIC, SBI Employees Pension Fund, SBI Life Insurance Co., HDFC Life Insurance Co., Abu Dhabi-based sovereign wealth fund ADIA, Goldman Sachs Investment and Morgan Stanley Asia. The price band for the share sale has been fixed between 3,112 rupees and 3,276 rupees, with an additional 64 rupees discount for retail investors.